everybody. So I'm Sita and this is Luke. We're going to be talking about the new mortgage rules. This is our first time doing Facebook Live, so be nice to us. So I'm Sita DosRamos from the DosRamos team with RE/MAX Escarpment, and I've been selling real estate for almost 10 years now, and this is Luke Robinson from
Mortgage Intelligence.
Thank you.
My name is Luke Robinson. I just recently made the move over to Mortgage Intelligence, so maybe that's a little bit what the confusion's about there, but no problem at all. Anyway, I just want to thank you for having me down here today to talk about mortgage rule changes. It doesn't get any more exciting than this, believe me. But today we're just going to go over a few points that keep buyers aware of the changes in their qualifying amount and how that might affect them during their home purchasing in the future.
Yeah, I know I personally had a lot of questions with buyers asking, what does this mean for me? Should I have bought last year? Can I buy this year? So we're just going to be talking to everybody about how we can help equip you and, better get, hi Kelly, you're distracting me, better equip you to buy in this market. So the first thing I want to ask really is, what are the actual new mortgage rules?
Sure, so no problem. So starting off, originally the only people that were really affected by the stress test regulations were insured mortgages, which is any mortgage with less than or equal to 20% down payment. That would apply to the bank benchmark rate, which is currently at 5.14%. Now, with these new rules, basically what changes is that it's all-encompassing for all new people applying on the prime side. So even people who put 20% down and more will now have to qualify at the bank posted rate of 5.14% or 2% the contract rate. So in a nutshell, that's basically what it is.
Okay. So does that mean that you're qualifying at 7% basically?
No, because the bank benchmark rate won't be the contract rate.
Okay.
So it's basically whatever is higher. So you would qualify either at 5.14% or the contract rate plus 2. And the contract rate today for, say, a regular conventional mortgage could be anywhere between 3.2% to 3.5% as an example.
Okay, I see. So basically what I've heard through other real estate things I've been to is that you're qualifying for almost 20% less than what you could qualify before is kind of the standard. So if you could afford, say, a $100,000 mortgage, now you can only qualify for an $80,000 mortgage. Is that basically what this implies?
I wouldn't say so, actually. So there's a little bit of variance in how you calculate the numbers. Okay. But basically what the stress test is making people do is to not max out their full lendability at any given time. So it wants people to have more of a cushion room to stabilize the housing market more so. So basically, I know the chief economist for Mortgage Professionals Canada said that's really only going to affect about 6 to 7% of your purchase price. Okay. And in the GTA, that translates to about, I'd say about $30,000 to $45,000 of purchase price range. Okay. So I don't think it's anything to worry about too much. Mostly because, in this market, there's so many available options at so many different purchase prices. At the end of the day, don't let this scare you away from at least going out there to look at homes, because something that you would like and love, I bet would still be out there, even if it means you're taking a $35,000 to $40,000 cut off the top, a purchase price.
So my next question was, which I feel like you've answered a little bit, is does it apply to everybody?
So yes and no. So in terms of everybody applying on the prime side, which is any traditional lender, so that applies to big banks, even on the B lenders or monoline lenders like RMG and MCAP, yes, that does apply to everyone. There are certain exceptions since this is a federal-based regulation. Provincial-based lenders that aren't regulated federally, actually, this could not apply to. Okay. So it's important to get in contact with your mortgage advisor or your mortgage broker if you really want to not worry about the stress test, because credit unions in Ontario are provincially regulated, and this might not apply to them. Sometimes credit unions obviously do follow federal regulations, but by law they're not mandated to. So to avoid this, that could be one option for you if that's something that's really important to you. But again, reach out to your mortgage broker as always. Yeah,
I think a lot of people just read the headlines, they see what's on the news, and then they're scared away, and then they don't even want to even jump into the market.
Yes.
Which it could be a good time because it has slowed down. It's not as crazy it has been. So
exactly. And you know what? At the end of the day, everything is relative, especially in the housing market. right? So, so right now, yes, the stress test does apply. Yes, you do qualify most likely for a little bit less at your max. You know, most people don't, a lot of people don't even go right to their max. By the end of the day, prices have cooled off a little bit. You know, we've seen definitely a little bit of a correction in some of the markets since. So at the end of the day, you qualify for less, but those houses are now less expensive.
Yes.
Again, always relative, always good to talk to your real estate agent.
Okay, and another thing is, so does this apply to B lenders, private money lending situations?
No, so private money lending situations that won't apply to.
Okay.
On the B side, yes. Now, for anyone that doesn't know, B lenders are non-prime lenders. So typically they have a little bit higher of an interest rate for their mortgages, but they are good for certain things. One thing that I know that my clients love B lenders for is that they qualify, they help you qualify your mortgage on your gross income. So if you're self-employed and you have a much higher gross income, it can be very beneficial to go with a B lender. And often it's because too, you know, when writing down your liabilities, when you're writing down your income when you're self-employed is important to so many people. So you can actually, you might pay a little bit more on the mortgage side, but what you save on taxes is at the end of the day will be much more. So always keep B lenders in mind, and also don't let that interest rate scare you.
Okay, perfect. And so what is some advice you would give to, say, a first-time buyer trying to get into the market? I mean, if even a starter home right now in my area, it's still pretty expensive for a freehold starter townhouse. Say you're looking in the $650 plus range. What is some stuff that they can do to help them afford something based on these new mortgage rules?
So you know what, it's actually not changed too much for young people who are putting less than 20% down, because there was a stress test already applied for that. But different strategies, almost unrelated to the mortgage, I always recommend people, you know, especially when things are so expensive and you don't think you can quite qualify or pay for that mortgage payment all by yourself. One option is always to buy the place and rent out a bedroom or two, or rent out the basement. This is huge now among especially my clients in the GTA, who are really helping bring people in to pay their mortgage off for them, which is always something that we would recommend. Yeah,
I feel like that we give that advice a lot to people, you know, buying something, especially, you know, I'm in the Hamilton kind of Burlington area, finding something where you can rent out the basement or, you know, split the house in two somehow. And it's a good way to be able to afford and make your house much more affordable. And also it might even increase the value when you want to sell later on. You have now, instead of a single unit family home, you have a 2 unit. It's very appealing to investors.
Exactly. We all love it when, you know, people can pay for things for us. So, you know, if it is an option for you, you know, get a renter in there, supplement your monthly payments, $500 to $1,000 if it's available to you, or always try to look for a way to make that an option for yourself.
Okay, and what about investors? Any advice for them? Do the rules apply? Say you're buying your 5th, 6th, 7th, 10th, 100th property. Does this apply to them?
Yeah, again, it's the same thing as before. So basically, if they're trying to get rental mortgages on the prime side, it's a stress test is going to affect them. On the rental side, it will affect you a little bit less, in my opinion, just because when you are getting a rental property and you are getting financing on that, the offset of the new income coming in, which you are now going to earn, will offset a lot of those new costs. Okay. So, you know, per rental property, income goes up. So this shouldn't affect them as much.
All right. Perfect. So do you foresee, I mean, I'm asking you literally to get out your crystal ball right now. Do you foresee this rule being in place forever? Do you think it's something that's temporary? Have you heard me talk about it? Like, this is brand new and sort of, I think, been a shock to everybody.
This is quite a bit of a shock. When it was before when it only applied to people who were putting less than 20% down and the stress test applied, it made a little bit more sense because those people had less equity in the game. Of course. But as long as, you know, the new Liberal administration's in place, I doubt they would repeal these rules. So I would say they are in for the long haul. Okay. Fingers crossed, no more.
So get used to it,
this,
people.
Justin, no more, please. No more.
And so how do you find that this has affected, I'm going to say, like, your clients, you know, have you seen it in effect in the real estate market? How do you see this effects come January till now? We've now had, you know, a quarter of the year or so almost to take a look at how this is affecting us.
Well, obviously it's a very debatable issue, you know, how this has affected us in the grand total scheme of things. Obviously prices have cooled down in the last year, and being on the inside of the business here, I know we can all both agree that we're happy that prices have actually cooled down a little bit. What we were seeing before was a little bit crazy, a little bit too risky, I would say. But I haven't seen too much on the personal side of how this will affect my buyers. I have had a couple first-time buyers, say, oh, well, now we can't get quite as much.
Yeah.
But at the end of the day, when you're being a first-time buyer and you're trying to be frugal, at the end of the day, getting something a little bit less expensive never hurts.
Yep.
So again, on the personal side, I haven't seen actually too much of an effect.
Okay.
But again, always reach out to your mortgage broker to see if that will.
So I have some of the stats here from like February. I mean, it'll be interesting to see, March stats haven't come out yet. I'll be posting them next week. We always post them on the DosRamos team page and try and give you a little blurb about what does it mean. So even last month in February compared to 2017, there was quite a huge drop in, first of all, listings. Like in the Hamilton area, say the listings dropped about 13%, but the sales actually dropped about 40%. So the amount of people who were buying, it was a huge drop. And I don't know if that's all because the mortgage rule could be many other factors. I think people are waiting to see what's going to happen. And I think we had a really hot spring the last few years. So,
well, we're also currently experiencing a little bit of an interest rate, a change in the market. One of the big questions that I'm sure we both get are, what's going on with interest rates? Are they going to go up? Are they going to stop?
I know, I get that a lot.
And at the end of the day, the good thing to watch is how the Federal Reserve in the United States is doing. If they increase their interest rates, it's very, very likely that the Bank of Canada here will increase interest rates as well to maintain our purchasing power on the international stage. Basically, as well with Trump talking about tariffs. This is not good business for central banks. They're very worried about how this is going to affect business. So, for the next interest rate change coming next month in April by the Bank of Canada, I'm actually predicting that it's going to remain the same. I'm not seeing another interest rate change just because there seems to be a little bit too much hostility in the international markets right now with the talk of tariffs.
So, I mean, that's a whole lot of factors playing into what is happening in the market. I mean, in Burlington alone, the sales dropped 50% in February. So that's the biggest drop I've ever seen personally in my years of selling real estate. But again, if you want to buy, I mean, it's a good time to buy. People are still listing. There's still, the listings only dropped 21%, but the sales dropped a lot more. So the market has been cooling off. I mean, it'll be interesting. The weather's been really cold. We're going to go, I find when the weather gets a little warmer, people are more willing to go out and start looking. So I think it'll be interesting what happens in the next few months. Keeping an eye on it. Again, we'll be posting more information to you always. So, I mean, I don't know if anybody has any questions for us. We'd be happy to take any questions. I want to say hi to all the people that are there on our feed. Thanks for joining in and tuning in. If there's anything you think that you would have a question about in the future, how can we, they get a hold of us?
Well, we do have a business Facebook page. You can find us at First Time Buyers Playbook here on Facebook. What we do is we update market information there. We have specific tools on there that allow you to go on and get pre-qualified. We actually have more systems in place on the First Time Buyers Playbook where people can go in and they can get a free credit score.
Cool.
And learn their maximum purchase price with these new rules in place. So I'd highly recommend going to check that out. Gives you all the information you need, even if you're at the beginning stages.
And I know you guys post sometimes some really good properties for first-time buyers, run the numbers and tell you what are you looking at, what are you getting into. So if you even want to just get a little bit of an idea, where I'm thinking of buying my first place, you should really check it out and see some of the properties they post. Some starter homes, you'll be surprised what you can get in different areas. Like in some areas, you might be able to afford a condo, and then in another area might be actually a full detached house.
Exactly. And we are moving into a buyer's market right now. So if you are hoping to buy a house, within the next year or 2 years, definitely start looking, definitely figure out your max purchase price, definitely see your credit score so you're ready to get a mortgage or to jump on a property when you find one you really love. And that would be my advice.
Okay, and you can always reach out to me. We have the DosRamos team page. My personal page this is going to be on. If you have any questions, we are always happy to answer. Thanks, everybody, for tuning in. We are really happy to do this. This is our first time.
Yeah, it was a lot of fun. Thanks so much, everyone.
Thanks. Bye,
Take
guys.
care. Bye.